I want to love short-term rentals and real estate investing in general, but man, the numbers just don't pencil for me. And because I want to love it, I find myself often, maybe once a week or a few times a month, just kind of opening up Zillow and looking at properties out there for sale and crunching the numbers on them. But again and again, and I've done this for years, the numbers just don't pencil for me, particularly relative to other investment opportunities that I have. So I figured that I would just go through and make a video analyzing or kind of looking at one of these short-term rental deals here and kind of explaining it. So if you're interested in investing in short-term rentals or in real estate in general, you might find this interesting and insightful. And hey, maybe you notice something I don't. And if you do, let me know in the comments below. Now, I've got Bentonville, Arkansas here pulled up on Zillow. And the reason why I was interested in this area is I ran across this, which is just kind of a website that has somebody's short-term rentals related to mountain biking. I ran across a Instagram post related to that. And that kind of was interesting to me because that's one of the things I've been thinking about is short-term rentals that really cater towards the mountain biking crowd, particularly because I'm an avid mountain biker. I do have a YouTube channel on mountain biking, and I really love it. I travel over half of the year for mountain biking. So one of the things I've thought about is getting some rentals set up in places that I like, where I could stay at when I want to be there, and catering them towards the mountain biking crowd and kind of building that into my little brand of mountain biking that I've got going on. And that would also yield some other tax benefits for myself. So excuse me. Yeah, that has been my interest related to real estate, or not my exclusive interest, but that is one of the things I'm interested in or have looked into. So when I saw this, I'm like, oh, this is cool. Let me just dive into that a little bit deeper. Now, there would also personally be some tax benefits if I could tie in all of my mountain bike travel to a business. And aside from that, with real estate investing in general, there's some substantial tax benefits to that, like a 1031 exchange. So you get a step up in your cost basis. And then also you get to deduct the depreciation on your real estate. So that will often offset your income the real estate earns. And that can also be carried over for years forward if that exceeds your income, and or it could offset other types of income depending on your tax status and how things are structured. Anyways, there's some substantial tax benefits to real estate, which personally speaking would be of benefit to myself, and I do want to minimize my taxes. Hence my interest in real estate and tying that into mountain biking. So yeah, I saw this and I'm like, let me just kind of look into things, right? And what I saw here were several rentals. I think they've got 6 of them in the Arkansas area. That's an area known for year-round mountain biking. So I just kind of took a look at one of them and I opened this one up. It links to the Airbnb profile for it. We can see they don't really have many reviews, and it's going for $143,000 a night. It's two bedrooms, 2-bath house in the Arkansas area. So what I wanted to do was just kind of pull one of those up on Zillow. I went to where it is. It's somewhere in this area here. And we can see that everything is going to be, at least $300,000, if not close to $600,000. I figured, if we do it cheap and to furnish it and all that, like what this is furnished as, it's very nicely furnished, and the interior is nice, you're going to be at least $400,000. So let's just kind of figure that your investment here is $400,000, right? To get a property like this or a single family home. And I think that is being very liberal. I think you're going to be closer to 500, right? And then let's just say that you're able to rent it out for $150 a night. Or let's be a little bit more generous here. Let's just say you're able to rent it out for $150 a night, and you're able to rent it out 60% of the time, have 60% occupancy, times 365. Your rental revenue from this is, I was going to be generous and say 200. $200 a night, because I know that the Airbnb number it shows here is $143 a night, but I am sure that when you actually select dates that you want, it goes up quite a bit. That's just my intuition from working with the Airbnb platform or renting on Airbnb. You see a thing that's like $143 a night, and then you select some days that's like $250 a night, you know? So I think it's going to be quite a bit higher in actuality. Let's just do 200 at 60% occupancy, because you're not going to rent this thing 100% of the time. I know some Airbnbs do get close to that. We are in Bentonville, Arkansas. It's not a primo Airbnb destination. And one thing to consider is a lot of people, when they're doing their Airbnb coaching or influencing, they always assume a 100% occupancy, right? We're going to rent it for $200 a night, so therefore it's going to bring in $73,000 a year. I think that would be 100% occupancy, right? No, it's not going to bring in that. So it's going to bring in $43,800. Then you're going to have property taxes on it. I would estimate those to be at about $2,500 a year. Your insurance on that, I don't know exactly what insurance rates are going to be in that area. Let's just call that $2,000 a year. And then repairs and maintenance. I'd like to be a little bit conservative with that. I would probably say about $3,000 a year. You got to figure, Airbnb customers, might have a lot of, not complaints, but they might be like, hey, my dishwasher isn't working. My washer and dryer isn't working. I find like appliances and stuff in Airbnbs, and this has been my experience with, talking to other people I know that own Airbnbs, is just kind of like basic user interface type of stuff. They have to send someone out. So they do rack up some repairs and maintenance and little things that get broken, like if let's just say a faucet might have a drip or something, you kind of have to send someone out, especially if you're trying to keep these a top-notch Airbnb. So you do spend a fair bit on repairs and maintenance, right? Those are what your annual expenses are going to be. Now, that is not even including what is going to be your management and marketing of this, right? Like, are you personally going to be playing front desk concierge for this thing? Are you personally going to be updating the listing on Airbnb and responding to customer inquiries? Or are you going to outsource that? I know there are companies out there that say, we'll handle it for 10%. There's some out there in some primo areas that go for 30%. I'm going to be rather liberal here and go 12% on this, right? And that's as a percentage of your revenue. So that times 0.12. All right, maybe you don't go with the lowest company at 10%. Maybe the 10% company is going to be short-lived and they're going to up your management fee. Quite frankly, that $5,000 a year seems like a lot of value to not have to sit around and play Airbnb property manager. I gotta say that. I do not want to be playing Airbnb property manager and responding to things on Airbnb and handling customer inquiries. So there's my marketing and management fee. That's going to mean my expense total is going to be the sum of these. And I might be overlooking some expenses here. All right. And then gross profit from this is going to be that minus that number right there. Now, one of the numbers I like to look at is what's called a cap rate. And mind you, let's just kind of establish that, didn't mean to do that. Let's just establish that, this is going to be spitting off $31,000 a year, and after you've invested $400,000 into it. All right, so your cap rate is going to be that number divided by that number, or 7.7%. That's not a horrible cap rate, I have to say that. Assuming these numbers, do turn out to be true. But again, you might also have to consider that you're going to have to pay your mortgage and interest and mortgage insurance out of that number. So that, might actually make your cash flow be substantially lower. And at the same time, that assumes your cap rate or your capital investment was only $400,000, right? So this is a big factor, right? If you make this $500,000, suddenly your number goes down on cap rate quite a bit. And if we go back to 400, we can keep it conservative. You get that cap rate. And then The other thing you have to consider too is you're going to get appreciation, but we don't know how much it's going to appreciate. Still, when I look at this number here, right, and I'm looking at 7% annually, when I could just put my money into the S&P 500 or a broad market index, and then I really don't have to consider any of these expenses. Again, right, like you're still going to have to take some time managing it. Even if you have a management company, you're going to have to take time paying the property taxes, the insurance, repairs, and maintenance. That might be handled by the management company, but you're still going to have to audit and review them to make sure they're not fucking you, because a lot of them will. A lot of them will take kickbacks from these companies, and subsequently the companies are just going to inflate the price that they charge you. You're still going to have to kind of get in there a little bit nitty gritty. So at a cap rate of 7.7%, a lot of people might say, that's really good. Well, in the single family rental space, that is pretty good, because I've penciled these on some single family rentals and they're like 3 or 4%, which is freaking awful. And mind you, I do think there's a few expenses here. I can't really recall them off of the top of my head that I think are not in here. So I think a realistic, estimate would be more like 6% on this one. But still, it's not bad, but it's also not good. If I'm going to have to kind of, have my money into something, I'd rather, at this number, I'd rather it just be totally passive, like the stock market. Or I'd rather own and operate a small business where I'm going to get a little bit of return on my sweat equity, and a higher gross profit or a higher cash flow back to my pocket. That's my take on it. Rental properties for me really don't have any appeal unless you're getting, say, a 10% cap rate. Right now, if you're getting the 10% cap rate, then things start looking a little bit juicy. So that's why I don't love rentals, short-term rentals, or real estate investing. I just don't see the returns that I'd like. I'd much rather either just keep my money passively invested in the markets, where I'm truly hands-off and passive and don't have to worry about the thing at all, or I'd rather, invest my time and, sweat equity from a mental perspective into an actual business where I can really earn much higher returns. On that note, guys, I hope you found this video helpful and insightful. If you feel like there's anything I missed out on, let me know in the comments below. I'm calling it a wrap and signing off on this one.